Good morning, traders. Happy Friday. I hope, like me, you have that Friday feeling today because today is a very important day for the markets. As I've been saying for the past few weeks in our videos, this summer period between sort of mid-July-ish until the end of August is never really ideal for trading. We have low market volumes, very little movement in most cases. It could be a bit boring when people are on holiday. And that's what we've been seeing this year, except I feel like it's even more so this year because people are waiting to see what the Federal Reserve are going to be doing, and therefore many markets have been in this sort of holding pattern for a little while. However, today is an important day because that comes to an end, we hope. The Jackson Hole Symposium started yesterday, which usually is a signal that it's an end of the summer slowdown, at least in my eyes. And this year it's even more important because today at 3 p.m. UK time, check your own time zone to make sure you don't miss this, is the speech from Jerome Powell, the head of the Federal Reserve. And I think this is what many people in the markets have been waiting for. Now, the Jackson Hole Symposium is always an important one. The markets always watch it closely for any hints or insights about future monetary policy. But this year's one, that's even more the case because we're expecting that the Federal Reserve will start tapering very soon, and we're hoping that we're going to get some hints about that today. Some officials have already suggested that that could be announced as soon as next month because inflation is still high, employment is moving towards the Federal Reserve's goals. In fact, inflation could even be above the Fed's 2% average at the moment, although they have been sticking to that messaging that is just temporary, it's transient. But employment is still below pre-pandemic levels by quite a lot. The latest NFP report showed that there were some very impressive numbers, so that's a good sign that the US is heading towards substantial labour market growth, but we could be a little way away from that, and that might slow down, this sort of need to start tapering. We don't know yet. So there'll be lots of people watching for any hints about how and when tapering may happen, and perhaps more importantly, how long it will last for. What's the timeline to do that tapering? So we have to consider some things here. For a start, there are still COVID risks around. Yes, I know it's boring and we're sick of hearing about it, but as we discussed in our last video about the different variants, the Delta variant is quite widespread at the moment. So that means if the Fed taper too quickly, then they could undermine the economic recovery. If the virus becomes a problem again, it could cause some issues there. On the other hand, if they move too slowly, it could mean that inflation does start to get out of hand, and this could become very difficult to control. So this would lead them to needing to take much more severe actions suddenly at some point in the future, and when they do that, it can tend to push an economy back into a recession. So what the Federal Reserve have at the moment is this sort of balancing act. They don't want to go too quickly, they don't want to go too slowly. And that's kind of been reflected in the market over the past month or so, where the markets were suggesting that the Federal Reserve is going to make a mistake. Not necessarily one or the other, but both. Like one way or the other, they will probably make a mistake. Either they will go too fast or they will go too slow. Now, in terms of interest rates, rate hikes are supposed to be happening after tapering ends. So that end date will be important for signaling to the markets, the timeline for those hikes, the end date of the tapering. So we've got to really pay attention if there's going to be any hints about this timeline. We'll know then when the rate hikes are likely to start. If we look back to when the Fed tapered after the financial crisis, asset purchases were $85 billion per month, which is less than the $128 billion a month they're doing at the moment. But that time, they announced tapering in December 2013, and the reduction in purchases started in the following month. They cut at a rate of $10 billion per month, agreed at each meeting, and tapering was completed before the end of the year. And then rate hikes came just over a year after that. So this time around, it's expected that tapering will probably follow a similar timescale to that. One view is that tapering could start in January, so they'd announce it, towards the end of this year, maybe even next month, but start in January and end in October, which would mean that the tapering lasts for 10 months once again. So to hit that target, that would mean that the Fed would need to reduce purchases each month by at least $12 billion. Less than that would mean that the timeline needs to be extended, and if that happens, it could push the rate hikes even further back. Okay, so you see how this sort of tapering timeline matters for when those rate hikes are starting. So based on that, it seems likely that tapering will finish towards the end of next year. That's assuming that risks such as COVID don't get worse and the Fed isn't forced to slow down their tapering or even make a U-turn. So in that case, rate hikes could be coming sometime in like the second quarter of 2023. There's a consensus view that that could be the case. Now, we've seen some Fed officials, like Raphael Bostic, for example, wanting to wait for more jobs reports to be released before committing to tapering, since he wants to see more evidence that the labour market is going to continue recovering. Remember, inflation is high, but although the labour market has been recovering, it's still below those pre-pandemic levels. So this whole decision about tapering definitely isn't a unanimous thing at the moment. There are different views between the Fed members. So it's not a set thing that they're going to announce in next month, that there's going to be hints about it in this speech today. In fact, it could even be that Jerome Powell chooses to sort of take the going under the radar type approach and not say anything too drastic. And if that's the case, we could still probably expect to see movements in the market, because I think the way the markets would perceive that is that maybe they're not in a hurry to start tapering, and so therefore it could go against what the market's expecting, that the tapering is going to be happening. So, as I mentioned, Jerome Powell will be giving that speech later today. It's 3 p.m. UK time, but check the economic calendar to be extra sure what time it is in your time zone. This one is definitely going to cause big moves in the market. So, we want to make sure that we're not trading during that time, or if we have trades, we're being very cautious. If you want to watch the speech, you'll be able to find it in several places. But in case you can't find any of the sources, it should be on the Kansas City Fed's YouTube channel. And I'll leave a link to that in the description just so you can find it. Now, if you are watching it, pay attention to any details that could help to pinpoint the timeline and the pace of tapering, both on the Treasury side and the mortgage-backed security side. There's been some mention that MBS purchases will be tapered quicker, but this hasn't been made official yet. So these are all the sort of details that we're wanting to pay attention to. And in terms of the markets, on screen here is the Dow. I'd really recommend not trading during the event, but I will be keeping an eye on what happens with US stocks and bonds and the dollar. But stocks are very close to the all-time highs at the moment, and the markets have been stalling out, waiting to see what happens at Jackson Hole. But we can expect a big change in context to end the week, and that would maybe kick off some new opportunities for the start of next week. So that's what I'm paying attention to. I'm sure throughout next week we'll update you on which markets are looking good now that the activity in the markets will be coming back. But that's all for now. So hit the thumbs up button if you found this helpful. Let me know your views in the comments section, or what you'd like us to focus on if you have anything in mind. And if you want to know more about how I trade, there's a link to our free training in the description box. Have a great weekend and a good rest of your Friday as well. I'll see you in the next one. Take care.